Hello, everyone. Welcome back to another episode of Signal or Noise. This is episode 52. Charlie Bilello here, and with me, as always, Peter Mallouk. Peter, just one topic today. I'm calling it Deficit Nation. How Washington's fiscal mismanagement is bankrupting America's future. I'm not holding back there. I guess you could guess my opinion, but we're going to dig through the big, beautiful bill and much more. First, I want to give the backdrop for people new to this issue, and you and I covered it a bunch last year or the year before, but here's where we are before this bill, just in terms of spending, in terms of tax revenue. This is why we have an issue with the deficit. We're essentially spending over $7 trillion, as you can see in this chart here, and we're bringing in about $5 trillion. So that creates, of course, a big deficit, and you could see in the last 10 years, what's the big driver? Is it spending or is it the lack of tax revenue? It's clearly spending, because we've seen tax revenue actually go up 60% over the last decade, but government spending is up 95% over that period of time. That leads to this chart here, which is a deficit of about $2 trillion. And the hope, Peter, entering the year, and there was a lot of talk about bringing this down. Some people were even talking about a balanced budget, which you and I kind of dismissed. But the hope was to cut this, just cut it a little bit, maybe bring it down to $1 trillion, just get it moving in the right direction, because the national debt, because of this deficit, has doubled over the last decade from 18 trillion to 36 trillion. And the more this number goes up and outpaces the economy, which is GDP, the more problematic it will become and the more interest we will have to pay on this debt. So the big surprise, Peter, was that there was massive support. First time I'd seen it in my lifetime for doing something about this. It was Republicans, Democrats, pretty much across the board saying debt isn't sustainable. The government should try to move towards balancing the budget. And this was, again, across Democrats, Republicans, party line. And you had, well, how should they solve this? Well, most people said they should reduce government spending, only a little bit saying tax revenue. So based on all of this, let's just set the stage. Were you optimistic coming into this year that something would be done over the deficit? There's bipartisan support in terms of constituents. There was a lot of rhetoric talking about cutting. What was your take coming into this year?
I was more optimistic than I had been in probably 20 years. I mean, if you really looked at like Trump's first administration, huge deficit spending, Biden administration, huge deficit spending. But a big part of what Trump campaigned on was getting control of the deficit. The first thing he launches is DOGE to try to cut costs. So it looks like we're trying to get serious here about having the revenue and expenses match up. And and then to have more bipartisan support than ever before to get a balanced budget. You had kind of a perfect recipe to make it work. So I was really, really negatively surprised here, and that's saying something, I think.
Okay, well, let's talk about that negative surprise and what they're calling the big, beautiful bill. And as Musk recently said, a bill could be big and it could be beautiful, but it can't be both. And it was a big bill, 1,100 pages. Doubtful that many of them read most of that. Of course, when you have a bill that long, a lot of stuff's going to be thrown in there that no one has any ideas there until after the passage of the bill. But given the bipartisan support in terms of American people, you would have thought we would have had a bill that would have passed by more than a single vote. But we're talking about here 215 to 214, not a single Democrat voting for this bill. And you had 2 Republicans voting against it. And then I found this pretty hilarious. You had one representative who accidentally missed the vote because he fell asleep in the back. I don't know how that's happened. But how do we get to the point where huge support, let's do something about the deficit, and then we only have a bill that passes by one vote? This is not something new. We saw it in previous administrations where it's essentially party line votes most of the time. But how do we get to that point?
I mean, you have Republicans are a majority here, and so many of them run on getting the deficit spending under control. And so that to get this bill from the Trump administration that goes in the opposite direction, it's hard to vote for that. I mean, they just needed a strong arm, enough of them with primary threats and other threats to drag enough people across the the finish line. I mean, anytime you have a one vote deal, or most of the time when you have a one vote deal, it's really supposed to go the other way, and different levers are pulled to get to get something passed. This is really unfortunate.
Yeah, and the real unfortunate thing is, let's say even they get this through in the current form, when it passes by such a thin margin, that means that no one on the other side is agreeing with much of what's in there. And then when the powers change, you're going to have a complete reversal of a lot of these policies. So it's not giving anything towards saying you can count on this for any period of time, because likely, just given the way the votes are, the next administration, if it changes, will change a lot of these policies. But let's dig into the actual bill here. I want to get your take on another number of the major provisions. I'm going to say flat out, really the only thing in the bill that really I'm 100% in support of was extending the tax cuts from 2017. If we didn't do that, Peter, that would have led to a tax increase on everybody pretty much, because that's what that tax bill did back then. It lowered the rate for pretty much everyone, had other things in as well. So, do you agree, first of all, that those should have been extended?
Yes, I think one of the big flaws of this bill is it really disproportionately benefits the wealthy, which is really I mean, I feel naive, a little surprised at how this came out, especially with all the rhetoric about, not taxing tips and things like that. You expected it to really favor people, more of the working class, kind of the people that voted him in the Rust Belt states, and that's not really what we saw here overall.
So let's talk about some of the details here. So first, I guess the least controversial would be just increasing the standard deduction, which essentially is just a tax cut for everyone that pays taxes. You get a bigger standard deduction. Not that controversial. We could debate, and we are going to debate whether we need more tax cuts given the deficit situation. But that's the least controversial. Maybe the child tax credit as well. But when you go from there, and you and I have discussed some of these, and we know they were campaign promises, so he's trying to come fulfill those promises. But then you get to a point where you're starting to favor certain people over other people. So
Yeah,
we
I mean,
have
like,
no
I look at
tax on
no,
tips
yeah,
and
no
overtime
tax
pay.
on tips is, I mean, it's crazy, right? You've got the person that's working at McDonald's, does not get tips, whatever they're making. Let's say it's $15 an hour. They're still going to pay taxes. But if you're working at like a Sonic, where you deliver to people's cars and a big portion of your $15 is tips, and Sonic gets to pay you less than McDonald's because you're getting tips, they're not going to be taxed. You have two people that are working very hard, very low incomes. One's not going to be taxed at all. One's going to be taxed. It's stupid. Like, if we want to give a tax break to people that have low incomes, just give a tax break to everybody in that group.
That's right.
This is going to result in all kinds of games being played, of trying to reposition compensation as tips and so on. And there is zero chance this is still a thing 5 or 10 years from now, and it's going to create a lot of problems. I am all for, like, my opinion on this is pretty extreme. Like, I think that if you're making less than a certain amount of money, your tax should be 0 to 1%. And if it's 1%, only so that you are contributing to the country that you're a part of, and that you're kind of used to that, in the sense that we should all be in it together, or zero. I'm torn between those two. But the idea that we're going to tax people that have very, very, very low paying jobs, the minimum wage jobs, and we're not going to tax people who are getting tips, it just doesn't make any sense.
Yeah, and just for the stats on that, 98% of workers don't receive tips. 95% of the lowest income decile doesn't receive tips. So again, you're picking and choosing. It's not fair. It makes the tax code more complicated. And as you said, you could just achieve that easily by raising the standard deduction. And the way we system it works today, Peter, and people would probably be surprised at this, but close to 50% of Americans who work and file their taxes are already paying no federal income tax. So you have to think about who are these provisions helping. Well, they're helping the people who are getting tips but are not in that lowest segment of people income earners. They're above that. And if we look at overtime pay, I would say the same situation. And you can imagine the games that are going to be played there. pay me less in terms of my regular wages and pay me a lot more for overtime because it's not going to be taxed. It's just simply not fair. And when it's not fair, to me, it shouldn't be tax policy. And the goal in the first administration, at least the first Trump administration, was all about making the tax code simpler. Of course, this makes it much more complicated. But this next one, Peter, really is fascinating. They said no tax on Social Security. They obviously couldn't get that through, but a $4,000 increase in the standard deduction for taxpayers 65 and older. And some people might be saying, well, why shouldn't they get that? These people are struggling, they're older. But once again, most of them aren't paying income tax on their Social Security. You have to make over a certain amount, the first 50,000 or so. If you include the standard deduction that they're getting, it's not going to be taxed. So it's, again, the wealthier people. And I just want to show two charts that illustrate this. Who has the wealth in America? It's primarily the older generations, 70 years and up, 31% of the wealth. Now it's a record high. They only make up about 11% of the population. You could see the increase here back in 1989. This was 19%. And if we look at the median household income by age group, 65 to 74 far and away has the most. Under 35, obviously, much less. Bless you. And the thought that you're going to target this group right here with the highest net worth of any age group and give them an extra tax break, am I being ridiculous, or does this sound crazy to you?
No, same. It's like the opposite of the overtime thing. Now we're going to a whole other generation and implementing a policy that doesn't make any sense.
But of course, there's a lot of voters in that age category, so of course, very popular. Then we talk about the SALT deduction. Where I live in New York, a lot of people want this to be raised. I'm personally against it because it's really subsidizing New York and not incentivizing New York to lower their income tax rates. You shouldn't get a federal tax deduction for state and local taxes, in my opinion, at all. But in order to get those New York congressmen to come on board, they had to give them this carrot or they wouldn't have been able to pass the bill.
Yeah, I mean, this is basically a tax break for the wealthiest people in the United States, most of whom live on the coasts.
And then auto loan deduction, Peter. And I know you and I have talked a lot about credit card debt, but auto loan debt, not great as well. And the default rates on these are going up. So the idea that you should be encouraging people to take on auto loan debt and giving them a tax incentive at a time, by the way, that the economy is in expansion. I don't hear that auto companies are struggling and that they're pushing it for that reason, just giving you a $10,000 interest deduction. And again, this is not going to go to the poorest Americans because they're not paying taxes to begin with. So that deduction is not going to help them. This is going to help, let's say, middle to upper income people. Does this policy make sense to you at all?
Like the rest of the bill, no. I'm with you on that.
All right.
I just think all of these are very gimmicky, and they are counter to what we expected to get out of this. Really an ideal bill is balanced, has disproportionate amount of breaks for the working class, which is really, really struggling with where home prices are, car prices are, interest rates are. And we got a bill it's like the Bizarro bill. It really surprised everybody. Quite the opposite of what most people were expecting with most of it.
Yeah. And just to be clear, in general, I'm in favor of lower taxes. I think tax rates are in general too high, but you cannot do that. You can't add additional tax rates without cutting spending because of the deficit problem. And they didn't cut enough spending, not nearly enough. So let's talk about kicking the can down the road, which is essentially, if this bill ends up being signed into law, what will be? Because, Peter, we were at $7 trillion. And if you look at if this bill is passed, these are the projections by the CBO. And what they're saying essentially is the spending is going to continue to go up, despite there were some spending reduction in the bill. But despite that, because of just the inertia, I guess, where it's very hard to cut things, they added spending to defense. And overall, even though they cut some, spending is going to go up. Part of that is because of interest costs are going to continue to rise because of the debt. But if you look at this chart, pretty clear, this is not cutting spending whatsoever. Spending is going to be higher next year and the year after and the year after if this bill is passed.
Yeah, and we've been talking a lot about taxes and our thoughts around that. Obviously, the problem is a spending problem. You cannot tax your way out of it. It should be easier to cut spending too than to get the tax side correct. I mean, even just a modest, everybody just agreeing across the board, everything's not going to increase for a couple of years would have made a very big difference. Couldn't even get that done.
Right. And so what the estimates are, and again, this could change because the Senate is going to be making changes, and there are a few people in the Senate, like Rand Paul, that are pushing back. They're saying, I'm not going to be on board with something that increases the deficit by this much. The projection is about $3 trillion over the next decade if this bill is passed, increase to the deficit. And what's essentially we're doing is spending a higher percentage of GDP, Peter, every year, 23, 24%, even after the economy went back into expansion after COVID. We kept this spending levels at a high level. And if this bill passes as is, it's going to continue to be much higher than it's been over the 50-year average, which is about 21% of GDP. So what does this do to the national debt? Betting markets are saying pretty much 80% odds here that we're going to pass 38 trillion. We're at 36.2 right now by the end of the year. And Congress, in their bill, is asking for a $4 trillion increase to the debt ceiling. Obviously, it has to be increased because we're still running a deficit the cuts haven't made. But this essentially tells you, doesn't it, Peter, that they're not really serious about tackling this because they're allowing for this huge increase in that debt ceiling.
Yeah, completely not serious in any way, shape, or form of getting this under control.
So ultimately, Peter, when does the can not get kicked down the road? And to me, it will come suddenly and then all at once. And I don't think we're at that moment today, to be clear. But when it does come, it's probably going to be reflected in this chart right here. This is looking at the 30-year Treasury yield. After the bill was passed, it spiked above 5%, hit its highest levels since 2007. And the risk, of course, is when this gets out of control, well, then you have to make a real tough decision. Do you want to inflate your way out of it, which we know we're trying to do anyway? Or then do you have really massive austerity where you have to make very difficult cuts at that point in time?
Yeah, I think it is confusing to people. Like, hey, I don't see a consequence to this. And I would liken it to a household that's got a credit card. They're spending $500,000 a year, even though they're only making 200,000. Credit card company wants to charge them higher interest rate now. They got to get another credit card. You switch companies around. There will be a day where a credit card company says, we're not going to loan you money, period. Or we're going to loan you money at 50%. And that's the day it's over, right? So the bond market is going to tell us when it's over. When the world is not willing to finance this, it'll be over. Now, part of why the United States gets away with this massive deficit spending is people have to loan money to somewhere, and they feel safer loaning it to the United States than anywhere else. The U.S. EU doesn't look great. Will there even be an EU in 50 years? I would bet probably not. China has a demographic problem. Japan barely surviving, getting out of deflation, and has a demographic problem. We're going to loan money to Africa, South America. The U.S. is still the safest place to loan money and get paid back. But the world doesn't like us. The world wants alternative places to lend to, and we're making it harder and harder to trust our financial system. So just like you said, it's going to be all at once. There's going to be a day, if we don't get deficit spending under control, that there will be an alternative and the world will move away from lending to the US, and we will have a real serious problem that, as you said, only gets solved with very, very high inflation. It's not going to be austerity. Americans can't handle 2 weeks of that, but it will be another kind of pain, which is inflation.
Yeah, so essentially just printing money to pay back this debt so the dollars are worth less, and that's how you service it. Not an optimal situation. We don't have to get there. I want to emphasize again, it's not too late. If we acted now and started moving in the right direction, by no means do I think it's too late, and that would actually help with the interest costs, because earlier in the year when it looked like maybe they were going to decrease the deficits, 10-year Treasury, 30-year Treasury yields were coming down, right, on that notion that there's going to be lower inflation, lower debt, and now moving in the opposite direction. So we'll see what happens. The Senate has the bill. We'll talk about it after they update it. But I think another big question within this, Peter, is the DOGE cuts. What happened to those DOGE cuts? Why were they not included in the bill? Why aren't they making that permanent? Because if you don't actually include it in some type of bill, rescission, and say we're cutting the spending, then it's just a temporary cut. So they've claimed they've cut 180 billion in terms of savings here. I dispute this number. I don't think it's an annual number. They're using multiple years. They've only shown 30% of this on their website for whatever reason. But I think they've cut a good deal. I think they've cut a lot of waste of fraud. They've done a good job in terms of transparency. And Elon Musk, who just left DOGE, should be commended for stepping away from Tesla. Definitely cost him in terms of his net worth, stepping away from there and actually doing the hard work and really pulling back the curtain in terms of how much money is wasted. But Congress has to act. And you just look at the comments from Elon Musk after he left his position in DOGE. He's essentially saying here, this massive, outrageous, pork-filled congressional spending bill is a disgusting abomination. It will massively increase the already gigantic budget deficit to $2.5 trillion. So I'm sensing here a lot of frustration. He spent a lot of time and effort talking about this issue. It was a populist issue, as we just showed, and it doesn't seem to be yet, at least. There's still time for them to do this. They're not making these cuts permanent. All they would have to do is send it to Congress, send it to the Senate, take these cuts and say, make them permanent.
Amazing to watch the divide between Elon Musk and Trump, how fast it happened. And it'll be very fascinating to see how public this gets. I mean, this is the Trump administration's bill. Elon Musk has barely been gone and he's already got it on full blast. So it's going to be very, very interesting to see where this goes.
Yeah, and he's not really holding back here. He's saying shame on those who voted for it. I mean, really, essentially saying they did something wrong. They should have come up with a better bill. They should have cut the spending and the deficit as they said they would do, but they didn't do it. Okay, last part here, Peter, because we get this question from clients all the time. We've covered it on Signal or Noise a lot. What about the stock market? Why doesn't the stock market seem to care about this? Actually continue to rally. I'm not going to say because the bill was passed, but it's now up on the year. It's up 24% off of the lows. Why doesn't the stock market care about the deficit and debt situation?
I think the stock market's looking at future earnings. What are companies going to make a year, 2, 3, 4 down the road? It's not worried about too worried about an existential debt crisis that's going to come to roost 10 or 20 years from now, right? And so there's still 150 off ramps between here and there, which is part of the problem. Like, no president. Why do you want to be the president, whether you're Biden or Trump or whoever? Why do you want to be the president that raises taxes and lowers spending and everyone gets mad if you cut spending anywhere and everyone gets mad if you raise taxes anywhere? Why do you want to be that guy when there's an off ramp for the next guy? And this is how debt problems happen in a household, and it's how it happens with presidents and Congress too. So I think that the stock market's just it's thinking about the next few 4, 5, 10 years. Now, having said all of that, it's priced in. If we had a balanced budget, the stock market would do much better. We do know that, and so it's priced in. But the contingent, collapse of the United States, that's still a highly discounted event in the very distant future, with a lot of ways to solve the problem between here and there.
Right. So it's not that it'll never be an issue. It's not if the worst case scenario plays out. Clearly, stock market's not going to be reacting well, but markets, at least for now, are not pricing that in. And what I always say is that the way corporate America, the way companies and businesses, small businesses, even households in America run their business is totally different than the government, which is to say they make a profit. And U.S. corporations are the most profitable in the world. We hit another record high in terms of earnings, looking at S&P 500, up 10% over the last year. Profit margins, Peter, around 12%, still historically high. So as much as the government is running on deficit spending, corporations are getting leaner and leaner. Obviously, we have AI expectations built into earnings going up as well. So it's a totally different animal. And in the short run, Peter, it's counterintuitive, but higher deficit, not necessarily the worst thing for these companies because they're benefiting from the government borrowing and spending this money. And we saw that really the extreme of that during COVID, right? Where we borrowed $4 trillion very quickly, sent it out there, and people spent a lot of it. And corporations like Apple and Amazon benefited from that. So in a weird way, I agree with you. Balanced budget long term would be better for everyone. But in the short run, it's very hard to do because you're going to take pain. It'll hurt. It'll be a hit to GDP in the short run. It'll be a hit to the economy and maybe even earnings. So for all those reasons, the stock market is up this year looking at earnings, and they're not operating the same way as the federal government. Last point here, if you're in the Chicago area, Peter and I are going to take this show on the road, Signal or Noise Live. We're going to do 7 timeless lessons for investors, other speakers as well. So join us June 26th. I'll have a link in the show note. It's open to everyone. Hope to see you there. And Peter, great show today. Good discussion. Thanks everyone for joining us on Signal or Noise. If you're watching this on YouTube, hit that subscribe button for all the latest content from us. And we'll see you next time on Signal or Noise.